Another Republican takes a stand, raising questions about the president's economic and tax agenda. And up in smoke, Northern California's cannabis crops destroyed by wildfire. And the timing couldn't be worse. Those stories and more tonight on Nightly Business Report for Tuesday, October 24th. Good evening, everyone, and welcome. I'm Tyler Matheson. Sue Herrera has the evening off. Well, stop me if you've heard this one before. The Dow closed at a record. It's 54th of the year. It was powered by two stocks, Caterpillar and 3M, both of which reported better than expected profits and offered up an even better outlook, thanks to a growing global economy. 3M and Caterpillar together accounted for the majority of the Dow's 167-point gain. And that dynamic duo helped the Dow close at 23,441. NASDAQ was up 11, and the S&P 500 added 4. Morgan Brennan has more on Caterpillar and 3M and what is driving the industrial sector to those new highs.
If industrial stocks are a bellwether of economic growth, then growth is brisk. Caterpillar got the most attention after the machinery maker crushed profit estimates and hiked its full-year forecast by an eye-popping 25%. It was a similar story for 3M as well, with the maker of Post-it notes and industrial coatings posting growth across its businesses, and the stock having its best daily performance in 8 years. Even United Technologies, which slid on weaker margins, raised guidance for the second time this year. Analysts say it all speaks to the underlying strength of the sector.
What's been surprising to us is how strong the quarter has gotten off so far, and the expectation that there's nice momentum into the fourth quarter. And so if you look at how the valuations of these industrials, they look stretched, but now we're beginning to see the growth coming through to justify those higher multiples.
After years of slumping sales, industrial production has picked up. Commodity prices have risen, and the global economy is expanding. That's fueling sales growth across many different businesses. Factor in investments to streamline manufacturing, major cost-cutting initiatives, a flurry of asset sales, and new product offerings. And companies like Cat, 3M, and Honeywell are beginning to reap the rewards. More than a dozen industrials hit all-time highs today. But there was one notable exception.
To call GE as an outlier this quarter is an understatement. You're in the middle of the throes of a management change, a complete reset of earnings expectations, and we're all now waiting for news about the dividend as well as the blueprint for CEO John Flannery that he'll unveil in this upcoming meeting on November 13.
After dismal earnings last week, analysts say in light of rivals' results, General Electric increasingly appears to be the sector's outlier, with that stock hitting a fresh multi-year low today. For Nightly Business Report, I'm Morgan Brennan.
With industrial companies like Cat and 3M fueling the market to new highs today, does this mean that the market rally is broadening out, as the saying goes? Christina Hooper is global strategist at Invesco, and she joins us now to discuss. Christina, welcome. Good to have you with us. You know, for so much of this rally, at least recently, it's been tech and financials. Today, a couple of sort of old-line industrials help along. Is this a good sign? Is it a sign that there is a rotation going in the market?
Well, there's certainly a rotation going on, and this particular one has been fueled not just by the global economic recovery, but by a weaker dollar, which is certainly helping a number of industrials. But I think the key point is that the advances being made by the stock market, for the most part, are fairly narrow, and it does suggest some underlying vulnerability. That coupled with, of course, stretched valuations.
Give me some detail on that. Give me some detail on where it is narrow and why that is a vulnerability.
Well, it's narrow in that we just don't have that many stocks on a given day participating in a rally, if we were to look back over the last few months, for example. So we've certainly had something of a rotation, but what we have, the net result has been that we have pretty stretched valuations, and much of it hasn't been fueled necessarily by earnings improvement, but by expectations. Expectations about a legislative agenda that has not yet come to fruition, in particular the tax reform package.
So what should I do if I am at my sort of full investment threshold in my personal portfolio, given what you seem to be suggesting here, which is that stocks are fully or maybe even a little overvalued?
Well, there's nothing to say this rally can't continue for a while, and I would argue there is an upward bias for the stock market, at least in the shorter term, given that we do have two key drivers, that global economic recovery as well as fairly accommodative monetary policy. So the key is to participate in capital appreciation, but be very well diversified so you can protect on the downside. So that means exposure to equities, but we want to be not just within the U.S., but have a robust exposure outside the U.S.
All right.
Be diversified even in fixed income and have an adequate exposure to alternatives.
All right. Christina, thanks so much. Christina Hooper with Invesco from Dallas tonight. Well, investors were loving it also at McDonald's. The world's largest restaurant chain reported strong sales thanks to cheap soda and build-your-own burgers. The company has been working to increase traffic at its U.S. restaurants after losing share to fast casual rivals. The CEO told investors that the business has regained its stride, and that sent shares of the Dow component higher. Late this afternoon, attention was on Washington. Republican Arizona Senator Jeff Flake announced he will not seek re-election, expressing dismay with President Trump and the direction of his party.
We must never adjust to the present coarseness of our national dialogue with the tone set at the top. We must never regard as normal the regular and casual undermining of our democratic norms and ideals. We must never meekly accept the daily sundering of our country.
Senator Flake's speech on the floor of the Senate came hours after Republican Senator Bob Corker and President Trump renewed their attacks on each other. And of course, it comes as tax reform talks gain momentum and where every vote counts. John Harwood is in Washington for us tonight. John, I haven't seen a day like this in my memory where two members, staunch conservative members of a president's own party, were so directly critical of the man in the White House.
Stunning rebukes of the president, Tyler. Bob Corker suggested the president was dangerous to national security, would not say he was comfortable with the president's fingers on the nuclear button, and Jeff Flake was challenging his colleagues to join him in standing up to President Trump. He talked about assaults on decency and truth. That's just an extraordinary thing you don't see, and it's a reflection of the extraordinary nature of the Donald Trump presidency. And as you indicated at the top, there are 52 Republicans in the United States Senate. To pass the tax bill, they need at least 50 of them. There are several Republicans who are at risk of flaking off and stopping tax reform, and President Trump is not making the task of holding them together any easier.
No, and the president obviously is on not on such great footing with Senator McCain, also of Arizona. Certainly Rand Paul has different ideas about what should happen with tax reform. Do you think that these Republicans in the end will go along with a Republican tax bill, or is it just too early in the process to say?
Most of them will, Tyler, and I talked to two McConnell advisors today who said they are very confident that Jeff Flake, despite that blistering criticism, will go along with the tax bill. But there are at least 3 Republicans who are vulnerable to defecting. One is Bob Corker, the other is John McCain, the other is Rand Paul for different reasons. Bob Corker, for example, says that he's not going to vote for anything that adds to the deficit. Rand Paul wants to see a bigger middle-class tax cut. John McCain also has concerns, long-standing concerns about the deficit. So this is not going to be easy for the president, and the more he engages in these skirmishes, the harder he is making it.
All right, John Harwood in Washington tonight. Thank you very much. Well, during a lunch meeting today with Senate leadership, the president asked who the Senate members, the GOP, would like to see him nominate to lead the central bank. One report indicated that Stanford economist John Taylor, a so-called hawk, won the informal vote. And as Steve Leisman reports, he is just one of 5 on a short list of candidates.
President Trump has narrowed his choice for the Fed chair down to 5 names. One group of nominees, they'd bring change to the Fed, perhaps dramatic change. The other, more or less, would maintain the status quo. The choice, which is effectively for the most powerful economic position in the world, is seen as one of the most important the president will make, and it could come as soon as or earlier than November 3rd. The leading candidate is believed to be Jerome Powell over here. He's a Republican nominated by President Obama, Federal Reserve governor since 2012. To the president, he's on the board. He was previously a partner at the private equity firm, the Carlyle Group, and favors rolling back some financial regulations, keeping some as well. Powell is seen bridging the gap between a desire for change at the Fed among some Republicans and desire to maintain the status quo, which Wall Street seems to prefer. Treasury Secretary Steve Mnuchin said to favor Powell. Former Fed Governor Kevin Warsh, he's seen as the second most likely choice. Hoover Institution fellow, Stanford University. Most importantly, Warsh served during the financial crisis on the Federal Reserve from 2006 to 2011, but he broke with Fed officials when he left in 2011. He thought the Fed had gone too far in keeping rates and policy too low for too long. The question is whether or not Warsh being the Fed chair would mean higher rates. Along the same lines, President Trump is also considering Stanford economics professor John Taylor, really seen as a leading light in monetary policy. He has strongly advocated for the Fed to follow rules for setting Fed policy. Fed officials have opposed this, saying it takes away discretion during critical times, for example, like financial crisis. Meanwhile, the president has said he likes and respects the current Fed chair, Janet Yellen, and she remains among the top 5, but her candidacy seen as a long shot, as most believe the president wants his own person in the job. The president could face opposition, for example, from Republicans who've been critical of the Fed. Still, Yellen has more experience at the Fed, as you can see here, than all of the other candidates combined. Gary Cohn, the director of the National Economic Council, a top economic advisor to the president, was once a leading candidate, but his odds fell almost to nothing after he criticized the president's response to the violence surrounding the Charlottesville protests. The predicted futures market gives him less than a 2% chance for being named Fed chair. Now, while those markets, they rate the probabilities, they try to price them in, White House insiders say the only list that matters is in the president's own mind, and no one has seen that list yet. For Nightly Business Report, I'm Steve Leisman.
And now to the housing market. Home prices are higher, and many are expected to tap into that newfound equity. And that means more people are likely to take out home equity lines of credit, but not in the same way they did a decade or so ago. Diana Olick explains.
Since the housing crash, homeowners have regained over $6 trillion in collective home equity, but they haven't been tapping it. Part of that is stricter mortgage underwriting and just the hangover fear from the housing crash. But that's all changing now. About 10 million homeowners are expected to take out a home equity line of credit in the next 5 years, according to TransUnion. That's more than double the 4.8 million originated in the last 5 years. Why? Well, people are not moving so much because of the limited supply of homes for sale. Also, lenders had pulled back on these riskier loans after the crash, but now they're looking for more business because refinances have dried up. So what will people do with the money? Well, Harvard's Joint Center for Housing says we will spend over $300 billion renovating and repairing our homes just in the next year. Home equity lines will also be used to consolidate debt and lower interest rates and to refinance old lines that may be hitting the end of the draw period. That's when you have to start paying principal along with interest. It's home as ATM again, but this time lenders will limit how much you can take out. In other words, you can't take all of it. For Nightly Business Report, I'm Diana Olick in Washington.
And to read more about the expected rise in home equity lines of credit, head to our website, NBR.com. And still ahead, a big breakup. The relationship Sears will end after 100 years. A 100-year marriage is over. After a century-long history together, Sears will stop selling Whirlpool appliances effective immediately. Shares of both Sears and Whirlpool fell, with Whirlpool shares also pressured by a profit warning late yesterday. The losses were steep. Seema Modi takes a look at this washed-up relationship.
After working together for more than a century, Sears and Whirlpool have cut ties due to a pricing dispute, meaning customers can no longer buy Whirlpool products, which includes Maytag, KitchenAid, and JennAir appliances from Sears department stores. In an internal memo to employees, Sears wrote Whirlpool has sought to use its dominant position in the marketplace to make demands that would have prohibited us from offering Whirlpool products to our members at a reasonable price. The breakup with Sears comes as Whirlpool just reported disappointing earnings and cut its 2017 guidance, citing sustained inflation in raw materials. But on a call with investors, Whirlpool CEO Marc Bitzer made the point that cutting ties with Sears won't be a big loss for the company.
To give you a perspective of magnitude, the entire Sears business has declined over time and now represents about 3% of our global business, of which the branded portion is only a small fraction.
Whirlpool has been dealing with heightened competition in the appliance market from General Electric, but it's also argued that South Korean players, Samsung and LG, are selling their products in the United States below cost, making washing machines a controversial trade battleground. And Sears is also dealing with a challenging environment as it rivals Lowe's, Home Depot, and Best Buy. Sears' market share has been on the decline in the U.S. appliance market, and experts say this breakup with Whirlpool could serve as yet another roadblock for the department store. For Nightly Business Report, I'm Seema Modi.
Former Dow component AT&T reported earnings that missed Wall Street forecasts. The #2 wireless carrier also posted a loss of video subscribers. The company earned 74 cents a share, a penny shy of expectations. Revenue down from a year ago to about $39 billion. Investors were left wanting more. The stock lower in initial after-hours trading. And Julia Boorstin now has the one key takeaway in AT&T's results.
AT&T's results were a bit lighter than expectations on both the top and the bottom line. But while AT&T's video numbers disappointed, there was a bright spot. Its wireless subscriber gains were stronger than Wall Street expectations. This after the company pre-announced the loss of 90,000 video subscribers in the quarter, saying that while it added more digital video subscribers than expected to its DirecTV Now service, that couldn't make up for traditional video losses. For Nightly Business Report, I'm Julia Boorstin.
Hurricane disruptions hit results at JetBlue, and that is where we begin tonight's market focus. Flight cancellations due to 2 hurricanes, along with higher operating costs, ate into earnings and revenue at the airline. And JetBlue says those factors will likely carry into the fourth quarter as well. Still, the company's profit numbers managed to top estimates. And as such, shares finished up nearly 4% to $20.62. The drug maker Biogen reported results that beat street expectations. Sales of the company's spinal muscular atrophy drug Spinraza beat expectations, but concerns arose about future revenue growth for the treatment. Shares of Biogen were off nearly 4% to $315.73. Eli Lilly raised its full-year earnings forecast and said it's considering selling its animal health business. The company, which reported stronger than expected results, said robust demand for its newer drugs will help offset a decline in sales when some of its older medications lose patent protections in 2018.
Some of our brands that have been with us for a while, like Effie and Strattera, are losing their intellectual property here in Q3. At the same time, though, we're growing through that, 9% growth. If we exclude the old products, our newest products drove almost 14 points of growth for the company. And so that's the power of our innovation story as we return to growth, is the newer products are getting bigger faster than we're losing revenue on the patents.
Eli Lilly shares fell 2% to $85.17. The online brokerage TD Ameritrade saw profit and revenue rise above street expectations. The CEO said investor engagement remains strong despite low market volatility.
We see quite a engagement uplift. Our new accounts are going up, and we have significant increase in our net accounts year over year. So, for example, we're up about 30% in our accounts this year over 2016. So market participation is broad.
The company also hiked its quarterly dividend 17%. Shares finished up almost 4% to $50 on the nose. Chipotle served up a disappointing quarter. After the bell, the burrito chain reported that both profits and sales missed analyst estimates. The company said while it saw some encouraging signs, quarterlies were impacted by the hurricanes and costs from a previously disclosed data breach. Shares initially fell in extended hours, as you see right there. They did finish the regular session, however, up 1% at $324.30. While California wineries are trying to recover from those recent wildfires, there's another industry that is taking a big hit from that natural disaster: marijuana. Some cannabis growers are still reeling from the fires just months before the legalization of recreational marijuana in the state. Aditi Roy reports tonight from Santa Rosa.
And this is how you got to my front door right here. We'll go up and then go in the second floor.
Damon Crane can tell you exactly where everything was in his house, even though there's nothing left of it.
And then this was a doorway going into my lower part of my house, and my sister's room is right here in the corner.
He lost virtually everything and barely escaped himself with his family when the flames came over the hill and peered into his home.
It just looked like a wall of flames coming straight towards me. It took about 10 minutes for us to get going, and I started using a hose to wet the house, but I knew instantly that the flames were too close. They were right on top of us, and so we jumped in the car and took off.
But he didn't just lose his home, he also lost his livelihood. What did this used to look like?
Oh, it was green, that's for sure.
Crane is a marijuana grower. He's been farming this land for 2 years and was getting ready to tap into a growing market with the state's legalization of recreational marijuana just 2 months away. Crane had already spent tens of thousands of dollars to meet the regulatory requirements of selling recreational cannabis. That's money he won't get back. Because marijuana is still illegal on a federal level, he can't get crop insurance for what he says was going to be a banner harvest.
I was 2 days away from harvest. We had already pre-harvested some of the product, and it was coming out really amazing.
Crane is one of at least 34 pot farmers in California who lost everything in the wildfires. It's still a small slice of the 50,000 growers in the state. But for those who were affected, the losses are huge. Unlike wine grapes, which were mostly harvested, marijuana was at the end of the growing season, which meant most of the crops were still out. The facilities here were all full of cannabis, and you can't even make out.
You can't even tell. I'm trying to tell the difference between the dry room and some of the storage areas.
Dennis Hunter is the co-founder of CannaCraft, which grows and distributes medical marijuana to 500 dispensaries. He showed us entire greenhouses and processing facilities that were once full of cannabis leveled. The barrels containing weed reduced to mere rings. Hunter says they lost a third of their crop. They're now examining the crops that did survive in their lab to make sure there's no smoke damage.
It'll definitely affect how we do business, and having that working capital to keep growing and providing more products for our patients.
Despite their losses, both Hunter and Crane vow to rebuild and replace what Mother Nature took. What are you going to do?
Start over. That's what we do. I mean, I'm going to clean it up and keep going.
Here at CannaCraft, Hunter says they expect to make up for the losses by relying more heavily on the growers who were not impacted by the wildfires. Statewide, insiders say they do not expect pot prices to go up since the majority of growers throughout California were not affected by the wildfires. For Nightly Business Report, I'm Aditi Roy, Santa Rosa, California.
Coming up, the new Kings of the Road. General Motors reported a drop in profits, but its results were still better than expected. The largest U.S. automaker reported strong sales of crossovers in the U.S. and sales in China, and came despite a planned decline in production in North America.
With that, we still generated very solid results. We're very pleased with the position of our U.S. dealer inventory. We reduced that by 120,000 units, and I think that sets us up not only for a good, strong fourth quarter, but going into 2018.
Shares of GM gained almost 3%. So are ride-sharing companies Uber and Lyft killing the taxi business? Two new reports show those companies are becoming more popular, especially in New York City. where the yellow taxi has long been the king of the road. Phil LeBeau has more.
It's not the death of the cab, but there's little doubt fewer people are hailing taxis. In fact, Morgan Stanley says more people took an Uber instead of a taxi in New York City last July. It says Uber snagged 36% of all rides in New York, just ahead of taxis and other rideshare operators. Uber's rise in popularity means it is now the dominant choice for those using a rideshare app. And increasingly, that includes business travelers who are hailing an Uber instead of renting a car or waiting for a taxi. But Uber's competitor, Lyft, is gaining ground. The corporate travel expense firm Certify says corporate travelers chose Lyft 11% of the time when choosing transportation out on the road. The growth in ride-sharing is one reason why rental car stocks have fallen out of favor. Hertz, Avis, and other rental car companies say it's a mistake to write off their businesses. After all, there's still demand for their rental cars. But as these new reports show, increasingly, ride-sharing is how more and more people are choosing to get around. Phil LeBeau, Nightly Business Report, Chicago.
And to read more about the road ahead for Lyft and other ride-sharing companies, head to our website, nbr.com. And that, folks, is Nightly Business Report for tonight. Thanks for watching. I'm Tyler Matheson. Hope you have a great evening, and we'll see you back here tomorrow night.
Here's what's coming up tonight on WPSU, an outreach service of Penn State. For a complete schedule, visit WPSU.org.
Everybody realizes by now that there's never been anything in our history to parallel the Vietnam War.
Spending $30 million a day in Asia, black and white boys are dying unjustly for nothing.
It's a disaster.
I don't think they really understood the total context of what we were trying to do over there.
I must say it was kind of hard hosting a show with such a gigantic, controversial subject.
I'm throwing myself in front of the show to tell you that we have a message, and you'll be right back.
Tonight at 10:30 here on WPSU.
Hello, I'm Paula Kerger, President and CEO of PBS. I'd like to tell you about a terrific new membership benefit called WPSU Passport. With a qualifying donation, Passport brings more than 1,000 hours of great PBS and local programming to your computer, phone, or digital media player. You can catch up on shows you may have missed or revisit some of your favorites. The best part is that you can watch whenever you want. When you make your qualifying donation, you'll help to make all of the programs you love on this station possible. So don't delay. I know that you're going to love WPSU Passport. So please make that donation right now, and thank you for your support.
My name is John Ringland. I've donated 2 vehicles to public broadcasting. My children, my grandchildren, and myself all get a benefit from it. I'll do whatever I can to help.
To donate, go to cartalkvdp.com.
I'm in a book club, and we have lots of fun. It keeps me connected to other people. I want to know what is going on in the community and what's going on in the world. And PBS presents that in a very positive manner. Charlie Rose is my favorite. I cannot go to bed until I've watched Charlie Rose. I want young adults to know that the world is a much bigger place than just the spot that they are occupying at this time. PBS brings a world that's bigger than the street that I live on. I have left my PBS station a gift in my will.
Learn how you can leave your mark on the world. Call 814-865-3333.
I want to be certain the programs presented by PBS are carried forward to future generations.
They are masters of both land and water, otters. But across the world, many are endangered. Now, with the help of 3 curious cubs,
they're doing otter selfies,
and 1 otter-obsessed wildlife cameraman, we're going to reveal their survival secrets. Wednesday night at 8 here on WPSU.
This is WPSU Clearfield, an outreach service of Penn State.
On the NewsHour tonight.
We must never regard as normal the regular and casual undermining of our democratic norms and ideals.
A Republican